One of the reasons why a lot of traders assist stock is the fact that they keep setting style stop loss in most of their trades, and they don't tend to see this because of the fact that they don't journal their trade, and this pattern keep reoccurring and reoccurring. And due to the lack of journaling, they end up not seeing those mistakes. And sometimes, due to the fact that they are ignorance, they are not even they don't even know if they are making any mistakes. They keep on repeating those mistakes and just being the same circle all over again. So in this video, I'm going to be showing you some of the common mistakes a lot of traders make when it comes to setting stop losses. So I'm going to show you guys the right place to set your stop loss, the things you need to do before setting stop loss, and the rest. So without any delay, let's get started. Neglecting higher time frame bias or higher time frame point of interest is one of the reasons why your trade keep hitting stop loss in the first market, and I'm going to show you guys an example here. Taking a look at this structure, this is obviously a bearish structure with a series of lower highs and lower lows and series of break of structure. So there's a particular entry here that a lot of traders would have ended up hitting their stop loss. Now if you take a closer look at this part of the chart, this is an order block. There's another block here. This is a break of structure, and this is 15-minute time frame. And the common mistake with traders is that most time whenever they open their chart, or maybe they've analyzed the chart before, they mostly start from the lower time frame perspective. Try as much as possible to always start from the higher time frame so that you end up not getting stop out early and the market will eventually end up going your way. These are the common beginners mistakes, and you need to stop making this mistake. Now if you take a look at this is our break of structure. Let me label it. That's our break of structure, and this is our liquidity. There's a liquidity here, there's an engineer liquidity here, and price came to tap into this point of interest, which is the other block. And now a lot of traders would have called this place, especially the beginners traders, they will set their stop loss above this other block, and this is a 15-minute order block. This is it here. And if you take a closer look at this, price hits the stop loss and eventually drop to the downside. And one of the reasons why this will have hit your stop loss is the fact that you started your analysis from the lower time frame. You didn't get to look at the higher time frame perspective, the higher time frame bias, and the higher time frame point of interest. Can you see? And this is a very beautiful setup. Now let's go to higher time frame and see the higher time frame point of interest. From what you must have learned online or from your mentor, most times you're always being advised to take your entry from the lower time frame, which is 15 minutes, 30 minutes. But it doesn't stop there. You need to add a little bit of confidence to this whole thing, because if you keep focusing on the higher and lower time frame entry and neglecting the higher time frame point of interest, you end up getting stopped out. So there are a lot of things to be put in place before you can just take entries on lower time frame, and your stop loss too matters a lot. So that is why you need to do a proper top-down analysis whenever you are looking out for your targets, either your stop loss or your take profit. It is very important. So that's the thing. So now let's go to the higher time frame, which is the next one. The next higher time frame there is 30 minutes. Looking at this 30 minutes time frame, the other block, the eye of the other block, or the eye of the candle of the other block, is somewhere around here. So on the norms, your stop loss should be above this eye. Your stop loss should be somewhere around here. And that's the thing. And the fact that you started your analysis from the lower time frame, which was 15 minutes or 5 minutes, you end up being stopped out. But assuming you started from day 1, 4 hours, down to 2 hours, down to 1 hour, down to 45 minutes, you must have seen this whole thing in the first place. You must have nowhere to put your stop loss. And aside that, there are some internal structures here also. This is the external structure. These are the internal structure. There's an internal break of structure here, and this is the candle that caused this break of structure for this internal structure, right? And this is a right entry. This is a good entry, considering the fact that this falls under our premium zone. So this falls under our premium zone. So that is a very good sell, because one thing you should also know is that you can have multiple POI in a zone. There's another POI here, there's another other block here, but this is the most recent one, and this is very close to the liquidity. So at the end of the day, price tap into it and drop to the downside. So as a forex trader, try to always do a proper top-down analysis. I always try to start from the higher time frame instead of starting from the lower time frame, because at the end of the day you won't see this whole thing, and this thing is a common thing that happens in the market. And at the end of the day, some traders are able to figure this out and correct their mistakes. Some they are not able to figure it out due to lack of knowledge or lack of self-awareness and all that. And some they do it repeated with them without them knowing, because they don't journal their trades. So all these whole things are very, very important for you to stay profitable. So try as much as possible to always do a proper top-down analysis. Your top-down analysis is also applicable to your directional bias, and it's also applicable to the candles and also to your point of interest and the liquidity. So these whole things are very, very important whenever you're analyzing the chart. So that will be all for today. Don't forget to subscribe to this channel. See you guys on the next one. Bye for now.